Hey guys, Ann Milano here, and have I got some amazing information for you today for 2020, the new year. So I want to talk to you today about rent versus purchase. But first, if you don't mind, if you could just hit that subscribe button and tap the bell, you'll be able to follow me on YouTube and hear all about all the videos that I put out for homeowners and anything Atlanta related. Food, great restaurants, the best brunch places, whatever it is Atlanta, I'm your gal. If you rent, the first thing that I want you to do is I want you to go and get yourself a trash can. Once you get the trash can, then I want you to go and get, let's say your rent is $1,500 a month. I want you to go to the bank and I want you to get $1,500 bills. Then I want you to take the $1,500 in $1 bills and I want you to put them one by one into the trash can. Okay? Once you do that, I want you to get a match, light it, and then throw it into the trash can with the $1 bills. Yes, you guessed it, a flame and an explosion is going to happen. So that's how I feel about renting. Basically, it's like burning your money. You are literally giving money to someone else to make them have a savings account. Now, if you're buying a home, there are 3 things that I want you to remember. Number 1, get yourself a piggy bank. Yes, that's exactly what I said. One of those little piggy banks, and you put it on your nightstand. Now, I want you to remember that every single time you make a mortgage payment, you are literally putting money into your piggy bank. Yes, let me tell you how this works. So, you pay $200,000 for the house. Every month, you make your mortgage payment, $1,500. That used to be what your rent payment is. Now it's your mortgage payment. Okay, so your $1,500, where does it go? $1,000 of it goes for principal. $500 of it goes towards interest. The interest that you have, that you pay every month, at the end of the year, the bank sends you a little statement, and on the statement it tells you how much money you can deduct from your taxes based on the amount of interest that you paid. How awesome is that? Yes. Okay, so you get to lower the amount of income that you made for the year and pay less taxes to Uncle Sam. That's number 1. Number 2, the second reason. The second reason is that you're putting 0% down. So you borrow $200,000, you're making that mortgage payment every month. The principal that you're putting out goes into the piggy bank. Because the $200,000 goes to $199,000 to $198,000, you get the point. Okay? So every month that you pay out that money, you are lowering the amount of money that you owe back to the bank. So, let's say 5 years, 2 years, 7 years, 10 years, whatever it is, you have lowered the amount of money, principal, that you have borrowed from the bank. Thus, there's a gap there. You bought a house for $200, you can resell it for $200. And guess what? That gap goes in your pocket. Yep, right in your pocket. Just like putting it in that little piggy bank. Just love that. Then there's number 3. Number 3 is, you guessed it, equity. Equity is the amount of money that your property increases over the years that you own it. So if you own a property for, let's say, 2 years, the value of the property may go up $10,000. You own it for 3 years, it may go up $15,000. You own it for 5 years, it could go up $25,000, $50,000, just depending upon the area that you live in and what the rate of increase is of what property values in that area have gone up, which is awesome. So 3 ways to make money. Yes, you heard me right. Make money when you buy a house. Number 1, offset your income. Number 2, you make the difference of the principal when you sell the house. And number 3, you make the equity that's in the house. Now, here's another fact that's very fun. The government says, or the IRS says, that as a single person, you can write off $250,000 income. Yes, income that you make from selling a property. So you buy a house for $200,000, you sell it for $450,000. That $225,000 goes in your pocket. You pay no taxes on it whatsoever. If you're married, you get $500,000 credit. So you buy a $200,000 house, you sell it for $700,000, you make $500,000 on it, you put that money in your pocket, 0 taxes to be paid on it. Thank you, IRS. Yes, these are awesome, awesome perks of being a homeowner. There's so many great advantages to it. I mean, it's scary, I will tell you that. You have to worry about insurance and, oh my goodness, if you have a plumbing problem, you have to call a plumber or an electrician or something like that. But in the big scheme of things, it is such a benefit to owning a house. Truly it is. Owning a house is one of the best things that you can do for yourself and for your family. The money that you will be able to accrue will constantly keep you over and over and over again making more money, which is excellent. It's a great little way of just stocking money away for the future. So in order to get a loan, feel free to contact me. Down below, you can see my phone number, my email address. Text me, email me, call me, whatever you feel comfortable doing. I don't care if you live in Georgia, South Carolina, California, Virginia, it doesn't matter. Wherever you live, call me. I'll be happy to find you the perfect person to work with in order to be able to find the perfect home. I will also be able to help you and guide you to the correct loan officer so that this way you can get qualified. And I mean, this is a no-brainer, guys. Call me. All right, Ann Milano signing out. Tune into my channel next week and let's see what we've got on store. Bye for now.